Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SoFi stock and how this company could literally jump by around 119% in regards to their stock price. Then we're going to move on and talk about Palantir Technologies PLTR stock and how they have a catalyst coming up where they will be hosting a conference with very important keynote speakers. So for more updates on SoFi Technologies as well as Palantir Technologies, remember to go and smash that like button right now, comment your thoughts down below about SoFi or Palantir in the comments, subscribe if you are new, and without further ado, I say let's get right into today's stories. Right now, the SoFi share price is trading for around $5.57. However, many analysts believe this company could achieve easily a jump by 119% just over the next 12 months. So I will be adding my educated opinion on this topic, what I think of Wall Street price targets, and if this is actually achievable for this company considering the current negative macroeconomic environment. SoFi Technologies, if you're not familiar with them, they are a fintech company or a financial technology company which offers their customers an all-in-one inclusive digital app which gives them access to various financial services and financial products. Recently, the SoFi stock price has gained around 11.4% over the past month, and many professionals believe that there is plenty of upside left in this particular stock. That's why many aggressive growth investors have poured money into this stock, waiting for it to pop off in the future. In the short term, Wall Street analysts are very bullish and positive on this company because they also believe that the company could surge by around 118.7% or 119%. And this is going to be a 12-month stock price target because the mean price target currently is $12.38. So if the current stock price surges to $12.38, it's going to pay off dramatically for their current investors, depending on their average cost basis for this stock. While the lower estimates for these price targets hover around $7.50, which would only indicate a 32.5% upside, still, it shows that the company is currently trading at a slight discount because even the lower end stock price targets are above the stock's current price, which would give investors good reason to think that this company is somewhat undervalued and could make them money over the next year. However, with that being said, the more optimistic bullish high-end price targets currently say the company could reach $30 during the next year, which would equate to around a 430% upside potential in this particular company. Now, with that being said, I really want to point out that these price targets are in no way, shape, or form what the stock will actually be worth in the future, and this article dives into that. We should only use price targets as general guidances of what the current analysts think of the fundamentals of this company. And I actually like hovering around the lower end of price targets, and that way I don't get burned on various stocks that have high-end price targets that are basically unachievable in that short of a time span, just being around a year. While the consensus price targets for this company are relatively high, investors should take these with a giant grain of salt for two reasons. Analysts who give the low-end price targets most likely are shorting the company and want the stock to fail, while the higher-end analysts want investors to cause the stock price to surge so they can get out of this position while making a profit. This shows us that on both ends of the spectrum, analysts are biased in their various price predictions and price targets, and that's what makes the price targets extremely questionable on a professional level. Also, I want to say that the various consensus price targets won't do us much good either, even if we look at the middle. Why? Because analysts more often than not are wrong in their price targets, and the chances of them actually being correct down to the dollar and cent amount of their price prediction is extremely unlikely. I want to point out that according to researchers at a plethora of various universities around the globe, price targets by analysts are generally inaccurate to the exact dollar and cent amount, and that investors would be better off by investing into a company that they have have personally researched and that they understand. Price targets should only make up one piece of a plethora of different pieces which make a puzzle and a picture of what this company truly is. Now, while Wall Street analysts do have deep knowledge of the company's financials and fundamentals, which should give them accurate price targets for this company using various models such as the DCF model, which is what I personally use to create price targets for companies that I am invested in, there are still underlying assumptions in these price targets that you need to be aware about. For instance, many investors and analysts tend to set very overly optimistic price targets in terms of their price predictions and price forecasts, which lead investors down the wrong path to achieve market capitalizations and valuations that this company literally just can't achieve in the real world. On top of that, considering the current macroeconomic environment with raising interest rates, these price targets should be much lower. However, it begs the question, should investors rely on price targets? Well, the answer is yes and no. Analysts are good at their job in the sense of they do have intimate knowledge of the company's financials and of course fundamentals, but their price targets specifically do have assumptions and or are backed by a certain bias. That's why we should use price targets as a general guide and not as a specific number that this company will meet in the next 12 months. Investors should not ignore price targets because these analysts still use very good financial analysis in determining these price targets. However, that's on us as investors to look forward into the various metrics that they used and the assumptions that we made and if we agree with them or not. Moreover, I would actually agree with the price targets surrounding SoFi Technologies to where the company could achieve a price target in the next 12 months between $8 to $12. And Zacks Rank, like I said in the previous video on SoFi Technologies, believes this company is a buying opportunity. And SoFi is literally ranked in the top 20% of more than 4,000 stocks that Zacks Rank currently has analyzed based off of 4 factors related to their overall earnings estimates. So with that being said, we can look forward to the future of what this company will make of itself in terms of their overall revenue guidance and earnings per share. But for the long term, I do think that this company is somewhat undervalued, but it will not rebound in its price target or keep its overall value in its price until the overall macroeconomic economy bounces back and we get lower interest rates and inflation is under control. The consensus price targets from analysts are not a reliable indicator. However, we should not dismiss them completely, but they do give us a good reason to assume the direction of the stock price. For instance, if the current stock price is substantially lower than even the lowest end analyst price target, we can anticipate that this company is most likely undervalued and that it could appreciate in price over the next year. So this gives us a good general guidance on where the stock price could be headed, but by no means should we just invest into a company based off of the stock price target. The next article that we are going to analyze is an author saying that investors should bet at least $100 on SoFi stock. It's really not going to hurt them. He's honestly telling you just to bet and wager $1,000 on this stock because this could be a multi-bagger in the long run. And I honestly agree with him. SoFi is currently on a mission to disrupt the traditional banking system by offering consumers an all-in-one inclusive app that would give them anything they could probably or possibly need in terms of financial services or products. A multitude of Americans actually have multiple accounts at different banks because they each specialize in something, making them better than the previous bank in either interest rates, investing opportunities, or maybe checking savings accounts or credit cards or debit cards, something like that. However, SoFi wants to be the number one in all of those various segments and revenue sources, and I believe they could do just that. That's why this author points out that SoFi could appreciate in their stock price and they're at least worth a $100 investment. He says, we should invest into this company particularly now while the Federal Reserve is increasing interest rates and while the overall stock market is falling. This allows us to get this company for a relatively cheap price compared to what it was previously trading at. Also, I want to say that the interest rate decision for the Fed will be on November 2nd, which is one day after SoFi Technologies releases their quarterly earnings report on November 1st. This is going to cause the stock price to be extremely volatile, so you may want to wait until after November 1st and November 2nd on whether or not you feel comfortable investing into this company. Now, if you are already invested into this company, and if you are borderline overexposed, this part of the video wouldn't be for you. If you already have a decent allocation to this company, then feel free to move on and identify another growth company that you could go in and research. I practice proper risk management, and I advocate for you to also practice proper risk management and not overexpose yourself to just singular growth companies. Like I've said in a multitude of previous videos, I am a ETF investor, and I like holding a basket of fantastic companies. I don't really bet my money on 1, 3, 5, or even 10 singular stocks without having exposure to the entire market, because that's just proper risk management. The article goes on to say that only investing $100 is definitely worth your while in terms of this company's particular risk to reward ratio. He also says that regarding the earnings report on November 1st, the company has had multiple earnings beats to where they have lowered their overall EPS net loss from a loss of 48 cents down to just 12 cents as of late, and this is very good. He also alludes to the fact that SoFi Technologies is anticipated to break even or even become profitable in the near future, and he's alluding to the fact that this company could become profitable according to current projections in 2024, so he's advocating to invest before this date, because past this date, when they become profitable, it could cause the stock price to surge. Overall, we're just going to have to see what the current earnings report has for us and what it has in store in regards to their overall revenue increases and their earnings per share. So the stock price most certainly could rally after that, but remember, the day after the earnings report, we are going to get news from the Fed, which will let us know where they want the interest rates to go, and I personally think they will increase interest rates again. I don't think we're going to have good news this quarter. I think that the easier fiscal policies will be issued in 2023 and not 2022, but we will just have to see. And then lastly, I have a quick update on Palantir Technologies PLTR stock, which is a big data and analytics company that serves both commercial clients as well as government agencies. Right now, the PLTR share price is trading at $8.63, while professionals believe this company should be worth anywhere between $6 on the low end and $20 on the high end. But of course, you all know how I feel about price targets. I just give these to you so you understand the general sentiment of analysts in regards to this company. Palantir Technologies has recently announced their FoundryCon US Customer Conference, which will be open to shareholders, global customers, the press, and the overall general public on October 27th. They are going to have a plethora of keynote presentations and speakers from companies like Morgan Stanley, or the U.S. Space Systems Command, the National Cancer Institute, NIH, and Tyson Foods. So overall, this is set to be a phenomenal conference, and we should be getting a first-hand look inside of Palantir Technologies, which could be positive or negative for the stock price, considering how investors actually look at this and if they release any really juicy information during that particular customer conference. But I would love to hear your thoughts down below. Remember to go and smash that like button for more news updates on Palantir and SoFi Technologies. Also comment down below some companies you want me to analyze and break down for you and my personal thoughts about them. Subscribe if you are new, and I will see you in the next YT video.